First of all, gold daily time frame technical setup. This wave count from bottom to top, which we can now say wave W, has made correction and 38% correction is done. And if this bearish drop does not stop, then next will be 50% retracement level. Price has hit a strong horizontal support level 1807, and first we need rejection on this level, then we can say that bearish trend has been ended. But below that technical support level you can buy, and 1787 can be your last technical support level. But below 1807, this is your buy zone. And after that correction, when new waves will come, new higher high will easily go up to $2100. And RSI is now back to oversold level. Even if it goes to 1787 level and immediately return back to 1807 with hammer candlestick or engulfing candlestick pattern, then that will be confirmed that bottom has come. Or there is a possibility that it can make upside correction back to 1850 level. And if we focus more only on this wave C, then subwave of wave C of this daily time frame on H4 time frame from this bottom 1725 to this top 1959. This is your complete wave counting, and it has ended at this top, and right now we are in correction, and you can call it this corrective wave, 5 impulsive wave, and right now we are in 5th wave. And when this wave will end, bullish trend will start immediately. And if you see this previous horizontal support and resistance level, then your support zone from 1807 to 1786 is your key horizontal support zone, because there is 50% retracement of this daily trend top to bottom, and it is strong horizontal support. And also this last wave C 61% retracement level, so this area is a strong buy zone. If you want to buy, you can buy, but upside target first can be 1843, then 1865, and up to 1843 it can easily go, because right now only two things matter: the economic indicator, because top was made on FOMC, but drop came after NFP, then ISM number, then CPI, and last your core PCE number, which came on Friday. And all of these number will come again next month. So if profit taking comes and counter trend correction start, because these seller will now wait for this economic indicator next month. And your geopolitical news, and it has been 1 year for Ukraine invasion, and now China and USA are fighting with each other. China saying peace in Ukraine, while US is saying war in Taiwan. And if their tension increase, then it can go up. So geopolitical news are bullish for gold and your economic news are bearish for gold, and now they are gone and next news will come next month. And from this bottom, when they did 75 basis point rate hike, then 50 in December, then 25 in Feb FOMC meeting, so that rate hike trend has been ended and your next trend is rate pause. And now many FOMC member, not just Fed FOMC member, but from Bank of England, the member are saying about rate pause. And rate hike game was started in March last year. So basically they are stopping their rate hike exactly 1 year. And once official announcement comes for rate pause, there is only one thing after that, that is rate cut, and which is always bullish for gold. And after that drop, market pricing for rate cut in December FOMC meeting this year are gone, and if there comes any trigger for rate cut market pricing even in December, it will start going up. And if you see one more thing, as a beginner trader, rate hike size was decreased in December FOMC meeting, but clear confirmation was came in October. That is why it immediately turned vertical after November FOMC meeting. So before official announcement for rate pause, market can make bottom. So that bottom will come maybe 2 months or 3 months in advance. When this top was made before FOMC meeting, there was zero expectation for rate hike in March FOMC meeting. What after all of these economic indicators, starting with NFP and ISM, market is now expecting up to 50% possibility of rate hike in March FOMC meeting for 50 basis point. And that is all bearish. And next is your May FOMC meeting, then June. In March they did 50 or 25, but after May FOMC meeting, rate hike will completely stop. And that is the main thing, that after May FOMC meeting they will hike interest rate or not. And same like your December FOMC meeting, the confirmation for last rate hike will come many weeks in advance, because there is not one thing. First is your rate hike. Question is when it will be last. Then there is balance sheet reduction, which you can call inverse QE. And third thing is monetary policy lag effect. That's mean they did multiple time 75 basis point. The lag effect of that rate hike will come, and now FOMC member are saying about this crystal clear. The effect of these three things together will force them to pause interest rate after May FOMC meeting. And because of that, all of that economic indicator will start coming down. NFP, if it goes up, then it will not increase terminal rate, but it is main thing CPI. But till June and July FOMC meeting, because of these three things together, indicator will come down and speculation for rate cut will start. and once market pricing start for rate cut, it will go up. On H4 time frame from 1807 to 1786 is your buy zone.